Well, let's bring in accounting professor from Montclair State University, Dan Geltrude. Dan, this is a fun topic. I mean, it's not surprising. Like, a lot of kids aren't really fixated on cartoons anymore. They like to watch the YouTubers review a toy or an item. And some of these kids make millions of dollars doing this. But if you think of that as a business expense, it might make sense. But talk to me about where the line could be blurred here for write-offs.
Sure. When you isolate certain things like, doggy shoes, those should be deductible. Well, the immediate reaction to that is that's outrageous. But we have to take a step back because these circumstances are unique. You have to look at whether these expenses, in order to be tax deductible, are reasonable and necessary for that business. Right? And the key on top of that is documentation. Do you have, number one, the actual support of what you spent? And then what is the reason that that expense should be deductible? And the reason it would be deductible is it is helping you to produce revenue or to produce profit, meaning if you didn't invest those dollars into those types of expenses, your business would not be able to produce revenue. So as outrageous as it may seem, it could well be tax deductible.
Yeah, exactly. I mean, we're not all involved in conventional businesses per se. People have been very creative in their businesses, particularly influencers. Let's scare everybody for a moment and remind them that we're 3 days away from the tax deadline, unless, of course, you filed an extension. So I guess where can this get into tricky legal hot water, I guess, for some of these people when it comes to dotting your I's and crossing your T's, particularly with the threat that there's now going to be more IRS agents out there monitoring people to make sure that they're doing the right thing?
Sure. So the big thing out there is, what are those red flags that would have the IRS, well, kind of turn their head and pay attention to you? Those are the things that you want to try to avoid. So when you're doing that, you want to make sure, honestly, that you don't make the silly mistakes, meaning that you're not transposing numbers like related to your Social Security number, so you don't have a match between what's been reported to the IRS and what you're reporting on your tax return. That's really one of the big things, that there's not a match of income and what the IRS sees reported to them and what's on your tax return. That's what triggers them to take a look to say, hey, wait a minute, you may not have reported all of your income, and that's a big no-no when it comes to the IRS.
All right. Well, appreciate all of that analysis and certainly the warnings. Dan Geltrude, great to have you here. Thank you, sir.
Thank you.